You're watching Silver News Daily. Subscribe for more.
Silver is about to explode, and if you're not ready, you could miss out on the biggest wealth opportunity of this decade. You might think I'm exaggerating, but even top experts like Rick Rule are saying it. Silver's price could skyrocket in ways we've never seen before. In today's video, we're breaking down why silver is extremely undervalued and primed for an explosive rally. So stay tuned, because if you're looking for the next big investment, you need to hear this before making your next move. And trust me, by the end of this video, you'll see why experts are calling silver the ultimate underdog asset, ready to make a historic leap.
The same thing for copper, the same thing for oil and gas, the same thing for gold. I see myself sort of as a pawnbroker for impatient people. They seem to get the big picture right, but they seem to employ short-term tactics around long-term narratives. And I love to be on the backside of that trade. So I've been a fairly consistent deployer of capital for the last 3 weeks into the disgust of people in the sector. I note that, as an example, the gold stocks have caught a bid now. But if you look at the bid that they've caught relative to the margin expansion that you are beginning to see in the big miners, I think that the bids they catch over the next year and a half will be much stronger. I would caution people not to listen to me at all if your timing involves being concerned about holding stock over a long weekend. I'm no trader.
Silver's price has been making waves recently, crossing critical levels that traders have been watching closely. It just surged past the $1.30 mark, a significant resistance point that signals a major shift in momentum. Why? Because the Federal Reserve is expected to cut interest rates by up to 50 basis points, and that's putting even more pressure on the U.S. dollar. As the dollar weakens, silver becomes more attractive to investors all over the world. But here's where things get interesting. Despite this bullish sentiment, many are still overlooking silver's potential, focusing instead on gold or other commodities. What they don't realize is that silver could be the sleeper hit of 2024, especially with Rick Rule pointing out that the market is underestimating how far this rally could go. If silver can hold this momentum and break the next key level at $31.76, we could be looking at a multi-month rally with no signs of slowing down. And with the Fed's decision just around the corner, now might be the perfect time to keep a close eye on silver.
Use as speculative capital, money that you can't afford to lose a substantial portion of. That's the other thing that I see grading these portfolios. You know, I have a question section at the bottom of these portfolios where I allow people to ask me questions. And if they're interesting enough, I answer them in my classroom. And so many people say, I have $50,000 to speculate with. I would like to put it down a $250,000 down payment on a house within 3 years. And, you know, you sort of ask them to revert to their youth and believe in the tooth fairy or something like that. The goals and the means are completely inconsistent. I understand that people want this to occur. I would just disabuse people of the sense that their wants somehow matter to the market.
Now, let's talk about something even more exciting, the hidden value of silver. Despite its recent rally, silver remains incredibly undervalued compared to its historical highs. Think about this. While gold has already hit all-time highs, silver is still lagging far behind its peak. Back in 1980, silver hit nearly $1.50 per ounce, and in today's inflation-adjusted terms, that price would be even higher. So why is silver still trading at just around $1.30? This gap between silver's current price and its true potential is exactly what makes it such a compelling investment right now. Rick Rule has been vocal about this. He often refers to silver as the poor man's gold, a term that highlights just how overlooked it is. And here's the kicker. Silver is not just a precious metal. It's also an essential industrial commodity. From electronics to renewable energy projects, silver plays a critical role in some of the fastest-growing industries globally. Rule emphasizes that as more investors wake up to silver's dual role, both as a safe haven asset and a key industrial metal, Demand could surge at unprecedented rates. Historically, whenever gold rallies, silver tends to follow, but often with even greater intensity. The smaller size of the silver market compared to gold also means that when institutional money flows in, it can cause silver's price to spike much faster. This creates a unique opportunity where investors can benefit from silver's historical undervaluation and its growing industrial demand all at once. Let's not forget, silver isn't just about catching up to gold. It has its own set of dynamics that make it a powerful investment in its own right. For instance, central banks around the world are stockpiling gold, and this trend is indirectly boosting silver's appeal. But what most investors miss is that silver's utility goes beyond what gold can offer, making it an indispensable material in high-tech industries. So, while the world is focused on gold's record highs, silver is quietly positioning itself for a massive breakout. Rick Rule and other experts are clear on this. The current undervaluation of silver won't last long. The question is, are you prepared to take advantage before the rest of the market catches on?
So I'm attracted to Agnico Eagle. You may know that I had Sean Boyd at my Natural Resources Investment Symposium in Boca Raton. I had the great pleasure of having him for lunch and really got to get in his head about how he built Agnico Eagle and how he continues to function as chairman now that he's no longer CEO. So I would consider that the bellwether operator. Endeavour Mining in Africa has sold off like a boulder off a bridge after thanking and excusing their CEO for financial improprieties. It doesn't change their status as a low-cost producer, nor does it change their development pipeline, although there is some concern that some of the operating management left to go to a new company, Lundin-backed, called Montage. But I would look at Endeavour for people who have the courage, the political courage to operate in West Africa. But people really need to focus on the highest quality names. And I would say the highest quality names are, respectively, Franco-Nevada and Wheaton. Franco is particularly attractive because it's underperformed. It has underperformed because an asset which was 14% of net asset value, the Panamanian asset, was at least temporarily nationalized. The arithmetic around this from Franco shareholders' point of view is interesting. The stock declined 42% because 14% of net asset value went away. It shows you that most speculators are very, very, very bad at arithmetic. So I think that's a reasonable smattering of names that people can look at. Coming down the quality trail a little bit, I think if you see any big sell-offs in G Mining, now that they've acquired Reunion, that would be worth looking at. A lot of Reunion shareholders owned the stock because it would be taken over. Now that it's been taken over, they have no continuing reason to own the stock. But the truth is that building out that deposit by the G Mining team, the best qualified team in the world to build it, will ultimately develop into a multi-asset gold mining company, which will be higher priced. If the share price of G Mining doesn't respond, I suspect that you'll see G Mining itself be taken over. My hope would be by Lundin Gold. Understand the Lundins don't listen to me particularly with regards to things like this. Coming down the quality trail again, probably getting to your question, G2 Mining, which is across the property boundary from Reunion, has to be taken over. Goldfields is a shareholder there, probably because they want to participate ultimately in the consolidation of that district, but it has to be taken over. So I think that's something that's worth looking at. It might not happen for 2 years or 3 years. And people who are going to have trauma holding stock into the fall would be well advised not to consider that name. Another speculative name I like a lot is Snowline. Sold off a lot because of the pit failure, or pardon me, the heap failure in the Yukon. The idea that an advanced exploration stage project sells off because of a temporary hiatus in permitting in the Yukon is hugely amusing to me. This is likely a 10 million ounce plus deposit, very good grade. Yes, there are challenges. It is in the middle of nowhere, but the exploration upside hasn't been factored in. So provided, Jesse, that your listeners do what you instructed, which is to say have a speculative bent and are willing to do the work. Those are some names that I think are more likely than not to.
Silver's true potential goes far beyond being just a precious metal for investors. Its industrial demand is skyrocketing, and this is one of the most powerful drivers behind the predicted surge in its price. You see, silver isn't just sitting in vaults or being used in jewelry. It's at the heart of cutting-edge technologies that are shaping the future. Take renewable energy, for example. Silver is a critical component in solar panels due to its unmatched conductivity. In fact, over 10% of the world's silver demand comes directly from solar energy projects. And with governments across the globe, especially in major economies like China and the US, committing to aggressive renewable energy targets, the demand for silver is only going to increase. China, the world's largest consumer of silver, has been ramping up its purchases for renewable projects, particularly solar. This push toward clean energy is setting up silver for massive demand increases in the years to come. But it's not just about energy. Silver's use in electronics is another major factor. From smartphones to electric vehicles, silver's unique properties make it indispensable in a variety of high-tech applications. For example, multi-layer ceramic capacitors, those tiny components that store electrical energy in almost every modern electronic device, rely on silver. And as the world becomes more dependent on technology, the demand for silver in this sector will only continue to grow. Rick Rule often stresses that this industrial demand is a key reason why silver could outperform gold in the near future. While gold is mainly valued as a store of wealth, silver's dual role as both a precious and industrial metal gives it a unique advantage. It benefits not only from safe haven demand during economic uncertainty, but also from the booming growth in industrial applications. This increasing demand in multiple sectors is exactly why many analysts, including Rule, believe that silver's price could soon explode. With renewable energy projects expanding, and with silver being crucial in technology and electronics, the supply will struggle to keep up with demand. And remember, silver is not as abundant as many people think. About 50% of silver is mined as a byproduct of other metals, which means its production is more volatile and less responsive to price increases than gold. So what we have here is a perfect storm. Rising demand in rapidly growing industries, limited supply, and a metal that is still significantly undervalued. It's not just about betting on silver as a safe haven asset anymore. It's about recognizing its critical role in the future of technology and energy. Rick Rule sees this industrial demand as a huge factor that will drive silver prices to new heights, and the market is only beginning to catch on.
As an example, 71 years of age, might do well to try to construct a portfolio of the 5 or 6 best gold mining companies in the world. In other words, participate in the beta that you might otherwise get with an ETF, but buy the higher quality companies so that you excise operating risk from your portfolio. For those who are, pardon me, Jesse, for those who are seeking alpha, of course, you need to come down the quality trail. You need to come down to the single asset producers that will be consolidated or taken over by multi-asset producers with a lower cost of capital. You may come all the way down into exploration, which has treated me well, but exposes you to a lot of risk outside the gold price. But I think it's important that one of the things that your listeners do, Jesse, is that they assess themselves. They assess how much work they want to put into investing. They assess how much risk they want to take, and they adjust their time preference to reality. You probably know that I have now graded over 80,000 portfolios for investors in the last 6 years, and I've learned a lot about the mistakes that investors make. What are they? Assuming more risk than they realize that they're assuming. Having a portfolio of penny stocks is not the same as investing. It's speculating. Nothing wrong with speculating, but you need to know what you're doing. The second is not doing enough work. I advise people to own the number of speculations that conforms to the number of hours per month that somebody wants to spend researching their portfolios. And by researching, I don't mean listening to podcasts. I mean, reading quarterly reports, annual reports, resource statements, proxies, insider filing statements. So if you're willing to spend 10 hours per month, own 10 stocks. Too many people whose portfolios I've graded have owned 60 stocks, and they can't possibly follow 60 stocks. The third thing is to get your time expectation aligned with the time that it takes. If you are expecting a 5-year bull market, which I am, and you're expecting that the bull market will be slow to get started, but also expose you to volatility, don't employ 3-month tactics on a 5-year narrative. It doesn't work. You're setting yourself up for disappointment. That's not the market's fault. That's your fault. Sorry for the rant, but you gave me the opening.
Now, while silver is gaining momentum in many parts of the world, there's an important factor that's been holding it back: weak physical demand from key Asian markets, particularly China and India. This is a critical point to consider because these two nations are historically some of the largest consumers of silver, especially for jewelry and industrial purposes. But right now, both countries are facing economic slowdowns that have tempered their appetite for silver. In China, while the demand for silver in industrial sectors like renewable energy is rising, overall consumer spending on luxury goods like silver jewelry has been weaker. The Chinese economy, which has been struggling with property market issues and slower growth, hasn't been able to sustain the robust silver demand that we've seen in previous years. This slowdown is acting as a drag on silver's long-term growth potential. Similarly, in India, silver purchases for jewelry and religious purposes have dipped due to higher local prices and economic uncertainty. Rick Rule has pointed out that although this might seem like a setback, it's actually a temporary blip in silver's overall bullish trajectory. What we're seeing right now is a disconnect between short-term physical demand in Asia and the larger global drivers that are pushing silver prices up. The weaker demand from these key markets is largely due to temporary economic challenges, but the underlying fundamentals for silver remain incredibly strong. There's another important layer to this story. While retail demand from these regions has been softer, central banks and large institutions in emerging markets continue to build up their reserves in precious metals, particularly gold. This trend indirectly benefits silver, as a rising tide in gold often lifts silver as well. The lower demand in China and India is more reflective of local economic struggles rather than any fundamental change in silver's value. Once these economies stabilize, and as global economic conditions shift, silver's physical demand in these regions is expected to rebound. Rick Rule emphasizes that savvy investors shouldn't be deterred by short-term fluctuations in demand. He often likens the current situation to what happens in every commodity bull market. Temporary pullbacks and challenges from key regions are inevitable, but they don't alter the long-term bullish outlook. The industrial demand we discussed earlier, combined with silver's undervaluation, creates a strong base that will likely overcome these short-term issues in Asia. So while weak demand from China and India may seem like a red flag, it's more of a temporary roadblock. The bigger picture is clear. Silver is primed for explosive growth, and as these markets recover, they'll only add fuel to the fire. In the meantime, this dip in demand is creating a window of opportunity for investors before the rest of the world catches up to silver's true potential.
People do gold in constant dollar terms. We would probably need 27.50 or 28 to have a real breakout. So it's good that you differentiated that for your audience, because many people don't understand that concept, which is distressing, given that the purpose of gold is real as opposed to nominal savings. Now, to your question. Bull markets traditionally follow a fairly consistent path, which is to say in commodities, the commodity moves first, and then the biggest, most efficient producers who can turn that commodity price increase into margin increase moves second. The move in the gold stocks has been constrained, I think, because the investment community has a memory of the performance of the gold stocks in the decade 2000 to 2010, which was pitiful. The gold price moved, if my memory serves me correctly, from about $2,500 to about $1,800, which is to say a 7-fold increase in the gold price. And the free cash flow per share on the XAU fell. It took skill to turn a sevenfold increase in the selling price of your commodity into reduced cash flow per share. So the expectation around the gold stocks, not merely in the general investment sector, but specifically among gold investors, is a terrible pun, but tarnished. What I think people are missing is that institutional investors in particular and sector investors are holding the managements to much higher standards now. And I suspect for the next 2 or 3 years, at least, that there will be much more fiscal discipline in the sector than there was. You mentioned Agnico Eagle as a bellwether, as a leader. That's because they've been a leader in the deployment of capital for 15 years. It's because they have been leaders in constraining their all-in sustaining capital costs. They've been leaders in selling off marginal assets and upgrading the quality of their portfolio. They haven't been a leader just because the gold price went up. They've been leaders because they've outperformed other companies in the sector. Investors, too, need to look at themselves, what they're trying to accomplish. My own experience has been that when you have a genuine gold bull market, which I think, but don't know, that we're in the early stages of, that the market beta, which is to say, in my definition, the extent to which the gold stocks themselves outpace the broad market, is substantial.
The Federal Reserve's upcoming decisions are arguably the most critical factor influencing silver's near-term and long-term future. Right now, all eyes are on the Fed as investors anticipate another significant rate cut, potentially as high as 50 basis points. This potential cut has already sent waves through the silver market, pushing prices past key resistance levels and creating a surge of buying activity. But why does the Fed have such a powerful impact on silver prices? It comes down to the relationship between interest rates, the U.S. dollar, and non-yielding assets like silver. When the Fed cuts interest rates, it reduces the returns on dollar-denominated assets, making the U.S. dollar weaker. A weaker dollar, in turn, makes precious metals more attractive to investors around the world because they are priced in dollars. Essentially, as the dollar loses value, investors turn to safe haven assets like silver to preserve their wealth. Rick Rule explains that the Fed's current policy trajectory could be one of the biggest catalysts for silver's next major price rally. With inflation still a concern and economic growth slowing, the Fed has been under pressure to lower rates further. This creates a perfect storm for silver, as investors seek protection from both inflation and a declining dollar. What's more, silver's dual nature, as both a precious metal and an industrial commodity, means it stands to benefit from both defensive and growth-oriented investment strategies. There's another important angle here. The Fed's rate cuts also put downward pressure on Treasury yields, further increasing silver's appeal. In a low-interest rate environment, traditional safe haven assets like government bonds offer lower returns, prompting investors to look for alternatives. Silver, along with gold, becomes a more attractive option for those looking to park their money in assets that can retain value and even grow as inflation erodes the purchasing power of cash. However, the story doesn't stop at rate cuts. Rick Rule and other market experts are watching closely to see how the Fed balances its fight against inflation with the need to stimulate economic growth. Any missteps, like delaying rate cuts or signaling too much caution, could send shockwaves through financial markets, leading to increased volatility. This, in turn, would likely push even more investors toward silver, as it thrives in uncertain economic environments. But it's not just about the Fed's immediate actions. Rule points out that the larger context is just as important. Over the last decade, the Fed has dramatically increased the money supply through quantitative easing. This flood of liquidity has weakened the dollar's long-term value, creating an environment where assets like silver could see sustained demand over the coming years. The Fed's ongoing need to manage inflation while keeping economic growth afloat will continue to support silver's long-term price trajectory. In summary, the Fed's role in shaping the future of silver cannot be overstated. With the potential for more aggressive rate cuts on the horizon, and an already weakened dollar, Silver is positioned to benefit massively from this macroeconomic landscape. Rick Rule believes that if the Fed continues on this path, silver prices could break through to unprecedented levels, making it one of the most exciting investment opportunities in today's market.
A couple of years ago, when I was selling my uranium stocks, I was widely pilloried on social media. This guy snatching defeat from the jaws of victory, all this kind of stuff. Now that I'm buying the things, I'm subject to a lot of abuse, and there's nothing I like as much as abuse on social media. I'm almost always early because I have a very rational mind. I believe if A is true and B is true and C is true and the logical consequence of D is D, I confuse the words imminent with inevitable. And I suspect I'm early in the uranium trade. But the truth is that uranium has paid me such extraordinary rents that if I'm a year and a half early, it doesn't matter. I suspect that my portfolio of junior uranium stocks has a 3 or 4 bagger left in it. Let's suppose I had to wait 3 years for a 3 bagger. Would that be a terrible outcome? I don't think so. For the people who are frustrated with their high quality uranium juniors, if your portfolio is causing you trauma, then sell. The essence of wealth is enhancing your sense of well-being. If you're not prepared to be a contrarian, buy short-term treasuries or something. Just understand that if you're selling that portfolio of high-quality juniors in the next couple of months, you're likely selling some of it to me. And thank you.
When we talk about the future of silver, we can't ignore the role of silver mining and how it factors into the coming price explosion. The supply side of the equation is just as crucial as demand, and right now, silver mining operations are facing a variety of challenges that could drive prices even higher. Rick Rule has pointed out that many silver miners are operating with extremely tight margins, and as demand for silver increases, the pressure on these miners to ramp up production will intensify. Here's the reality. Silver is most mined as a byproduct of other metals like gold, copper, and zinc. In fact, only about 30% of the silver produced comes from dedicated silver mines, while the rest is a secondary product of mining for other minerals. This means that the supply of silver is not as responsive to price increases as other metals. Even if silver's price shoots up, mining companies focused on other metals may not necessarily increase silver output. This creates a significant bottleneck in the market, and is one of the reasons why silver prices could rise much faster than other commodities when demand spikes. Rick Rule often stresses the importance of looking at high-quality silver mining companies. The silver mining sector is notoriously difficult to navigate, with many junior miners lacking the economic silver deposits necessary to capitalize on rising prices. Rule highlights the need to focus on companies that have substantial reserves and efficient production processes. For investors, this means not just riding the wave of rising silver prices, but also identifying the miners that are best positioned to benefit from the coming surge. One company that Rule frequently mentions is Mag Silver, a major player with a world-class deposit in Mexico. Mag Silver has been able to weather the volatility of silver prices by maintaining strong production numbers and operational efficiency. This gives them a critical edge as silver prices rise. Another key player is First Majestic Silver, known for its aggressive expansion strategy and focused on high-grade silver projects. These companies are positioned to take full advantage of the next silver bull market. But it's not just about established names. Junior miners like Aber Silver and Vizsla Silver are also gaining attention for their high-quality silver deposits and aggressive exploration efforts. Rick Rule advises investors to watch these companies closely because in a bull market, the smaller market capitalization of these juniors can lead to explosive price movements as institutional money starts flowing into the sector. However, there are risks to consider. Mining is heavily influenced by geopolitical factors, and silver mining is no exception. Many of the world's largest silver deposits are located in countries with unstable political climates, such as Mexico and Peru. Rule often cautions investors to be mindful of political risks, but he also argues that these risks can be managed. Companies that have strong relationships with local governments and communities tend to navigate these challenges more successfully. In fact, Rule points out that political risks in developed countries such as Canada can sometimes be just as significant, particularly when it comes to regulatory changes or environmental policies. The key takeaway here is that the silver mining sector is primed for growth, but it's not a one-size-fits-all opportunity. Investors need to be selective, focusing on companies with solid resources, efficient operations, and the ability to scale production in a rising price environment. Rick Rule believes that the silver miners who get it right will see massive gains as the price of silver begins to reflect its true value. So, while silver itself is an exciting investment, the mining sector presents an even greater opportunity for those willing to dig a little deeper.
Very, very well for doing that. Meanwhile, world class ore body. I'm attracted to the discoveries made by Vizsla Silver. I'm attracted to the discovery made by Abra Silver. I'm attracted, although it is expensive, to the superb operating performance of Aya Silver. I mean, these guys have just knocked the ball out of the park operationally. I'm impressed, too, with the operating performance of Silvercrest, although I need to see a new reserve and resource statement to increase my confidence about the fact that this is a long enough lived ore body to give me the net present value that I'm hoping for. Silver investors need to understand that silver generally lags gold in a bull market, depending on how far the way through the bull market we are. My experience has been that when the generalist investor buys into the precious metals narrative, that's when silver leads. Until then, when it's still a fear market, gold leads. The point of all this is don't, again, buy into the silver market with a short-term narrative. It's not a short-term trade. The spark hasn't been lit underneath silver or silver stocks. You do it with uncertain timing because the rewards for success are so incredible. As Doug Casey points out, when the generalist investor comes into the silver space, the market capitalizations of the legitimate silver juniors are so small that, as Doug says, the result is like trying to siphon Hoover Dam through a garden hose. There is not enough room in the sector to handle the money. And the returns are berserk. I probably now have 2.5% of my portfolio in the silver equity space. And it wouldn't surprise me to see that 2.5% of my portfolio become 25% of my portfolio. I'm not saying it's going to, but that's what tends to happen when you come into a silver bull market. And if we do come into a silver bull market, Jesse, I hope that you're leading the bandwagon with your listeners to tell them to sell some. You haven't made the money until you've taken the money. And if you're one of those people for whom the narrative gets more valuable as the price goes up, you will be a victim.
As we look at the factors driving silver's future, we can't overlook the impact of geopolitics, which has become a major force in the precious metals market. Silver, much like gold, benefits from its status as a safe haven asset. Whenever geopolitical tensions rise, investors flock to assets that can provide security and stability. But here's where silver has a unique advantage. While gold has always been the go-to safe haven, silver's lower price point and growing industrial demand make it an increasingly attractive alternative, especially during times of uncertainty. Rick Rule has been clear about this. Geopolitical tensions are one of the biggest catalysts for silver's bullish outlook. Central banks around the world, particularly in emerging markets, are aggressively increasing their gold reserves as a hedge against global instability. This shift is important because as more central banks move into gold, it creates a domino effect where silver also sees increased demand. Investors often turn to silver when gold becomes too expensive or as a way to diversify their safe haven assets. Currently, several geopolitical hotspots are contributing to this trend. Tensions between the U.S. and China, ongoing conflict in the Middle East, and the war in Ukraine have all pushed investors towards safe haven metals. But there's another dimension to this. Silver's role in the industrial sector means it also benefits from these geopolitical shocks in a way that gold doesn't. For example, disruptions in global supply chains, particularly in electronics and renewable energy, can drive up the demand for silver, which is critical in both industries. But it's not just about supply and demand. The geopolitical risks facing the silver mining industry itself add another layer of complexity. Many of the world's largest silver producers are in politically unstable regions, such as Mexico and Peru. While these countries have significant silver reserves, they also face ongoing political challenges that can disrupt mining operations. From changes in government policies to local unrest, these factors can limit silver supply, pushing prices even higher. Rule emphasizes that investors need to be aware of these risks, but he also notes that geopolitical instability can be a double-edged sword. On one hand, it creates volatility that can disrupt supply chains and production. On the other, it drives up demand for safe haven assets like silver. He points out that companies with strong local ties and the ability to navigate complex political environments are in the best position to thrive in this type of market. One recent example is the rise in central bank purchases of gold, which has indirectly benefited silver. Emerging market central banks, especially in countries facing economic or political challenges, have been stockpiling gold to stabilize their reserves. This shift is putting additional upward pressure among precious metals markets, with silver poised to follow gold's upward trajectory. As Rick Rule notes, silver may be late to the party, but once it joins, the impact could be massive. In conclusion, the geopolitical landscape is playing a crucial role in shaping silver's future. Whether it's the direct demand for silver as a safe haven asset or the challenges facing silver production in politically unstable regions, the influence of geopolitics cannot be ignored. Rick Rule believes that this factor, combined with silver's industrial demand, will drive the metal's price to new heights in the coming years. For investors, keeping an eye on global events isn't just important. It's essential to understanding why silver is primed for a significant price explosion.
In regards to political risk, people tend to overreact to political risk they don't understand. To put it in politically incorrect terms, people like you and I, white people schooled in English, seem to believe that money stolen from us in English by white people according to the rule of law is somehow less gone. I don't consider British Columbia, as an example, to be a substantially less risky political jurisdiction than either Peru or Mexico. It's just that the risks are different. Investing in British Columbia, if I'm investing in the territory of the Tahltan, First Nations people who I know and love and trust, and I believe will protect me from the political vagaries of Victoria, is a different circumstance. But the political risk in South America is a political risk we understand less well. The risks in Peru have to do with the fact that the rents from mining have always gone to the capital, Lima, while the regions literally have gotten the shaft. That is something that you need to take into account if you're operating in Peru. It's important that your company have very, very, very good local community building relationships because the center in Peru is pro-mining. The regions who have been victimized are anti-mining, and you need to deal with that. Similarly, the political risks in Mexico are different, but I wouldn't consider them to be greater, as an example, than the political risks in British Columbia or California or other Caucasian people's republics. So I think it's important to understand the risk. The bigger risk in the silver miners is that too many of the junior silver miners don't have any economic silver. That's a much bigger risk. Governments don't steal something that isn't worth stealing. So you should substitute political risk for technical risk. You want grade and you want size. It is true you have greater optionality in a silver bull market with the, quote, bullshit silver mines, the people who have great narrative, tiny market caps, and can promote well in a liar's market. But there's too much risk assuming that somebody even dumber than you is buying a burning match after you buy it in a bull market. So you want the higher quality names. And the higher quality names aren't markedly more expensive, or frankly, are often less expensive on a net present value than the more speculative ones. Want silver? Look at Mag, a big, big, big silver producer. Way too much G&A. Way too much G&A. All they really have to do is audit their partner, Fresnillo, and they pay themselves.
So, after everything we've discussed, the bullish technical signs, the growing industrial demand, the Fed's monetary policy, and even the geopolitical tensions, it's clear that silver is sitting at the edge of a monumental breakout. But how high can it go? And what's the driving force behind Rick Rule's belief that silver is primed for such an explosive price surge? Let's start with the unique combination of factors converging right now. First, silver is still massively undervalued when compared to gold. Historically, the gold-to-silver ratio, which measures how much silver it takes to buy 1 ounce of gold, has been much lower than it is today. Even with gold near its all-time highs, silver is still lagging far behind its own historical peak. Rick Rule argues that this ratio can't stay this stretched for long. Eventually, silver will have to play catch-up, and when it does, the price increase will be exponential. But here's what makes this situation different from past silver bull markets. The demand from the industrial sector is hotter than ever. Renewable energy projects, the electronics industry, and technological advancements are all driving demand for silver in ways we've never seen before. As the world moves toward green energy, silver's role in solar panels, electric vehicles, and even 5G technology is only going to grow. This means that unlike previous bull markets, where silver's rise was primarily driven by investor sentiment, this time there's a solid long-term demand underpinning its price. Rick Rule has repeatedly emphasized that silver has the potential to outperform gold in this next cycle, not just because of its lower price point, but because of its utility and growing demand. He believes that silver could easily reach levels that many investors wouldn't have thought possible just a few years ago, $40, $50, or even higher. Now, the final piece of the puzzle is the supply side. As we discussed earlier, silver mining isn't as flexible as you might think. With much of the world's silver being mined as a byproduct of other metals, supply won't automatically ramp up even as prices rise. This creates a supply crunch, where demand far outpaces the available silver in the market. Combine this with the geopolitical risks facing some of the largest silver-producing countries, and it's easy to see how supply constraints could drive prices even higher. So what does all of this mean for you? According to Rick Rule, silver's price explosion isn't a question of if, but when. The conditions are all in place. Silver is undervalued, demand is growing across multiple sectors, and supply remains limited. For investors, this is a rare opportunity to get in before the market fully recognizes silver's true potential. Rule believes that once silver breaks through its current resistance levels, we could see a rapid and dramatic price surge, and those who act early stand to benefit the most. In the end, Rick Rule's message is clear. Silver is the ultimate underdog, ready to make a historic leap. The price explosion that many are predicting could change the game for investors, and the time to position yourself is now. If you believe in silver's future, this is the moment to take action. And with that, if you found this breakdown helpful, make sure to subscribe to stay updated on all the latest insights in the silver and precious metals market. Remember, this is not financial advice, but rather an exploration of the possibilities ahead. Stay informed, stay prepared, and be ready to capitalize on what could be one of the biggest silver booms in history.